What if the crypto you spent years mining just disappeared overnight? What if, after waiting patiently for a promised mainnet launch, your entire portfolio became untouchable and there was nothing you could do about it? Since March 14, 2025, the Pi network has entered a storm of confusion, frustration, and volatility. Millions missed a crucial KYC deadline. Access was lost. Prices crashed. And now, the Pi community is asking, is there still hope? Or was this all a decentralized dream that went wrong? In this video, we'll uncover what's really going on behind the scenes of Pi network, what happened after the KYC deadline, how the price reacted, what could come next, and whether Pi is still worth believing in. You'll want to watch until the very end, because the full picture is more dramatic than you might think. March 14, 2025, was supposed to be a celebration. Known to the community as Pi Day, it marked a major milestone, the end of Pi network's long transition to its Open Mainnet. Blockchain upgrades were rolled out. PiFest was launched to promote merchant adoption. It should have been a moment of victory. But instead, it became a point of crisis. The final KYC verification deadline expired, and with it, millions of users who hadn't verified or migrated their tokens were effectively locked out. Years of mobile mining, daily check-ins, and community engagement all rendered inaccessible in a matter of hours. For those users, their Pi is now frozen in the testnet, with no access, no trade options, and no clear path forward. For verified users who successfully migrated, the experience was mixed. Some transfers to the mainnet went smoothly, and early adopters began testing transactions. Others reported technical issues, stuck transfers, or even losses. The instability led to market panic. Prices began to fall. And confidence in the project took a massive hit. Looking at the charts, the damage was clear. On May 15, Pi's price hovered around $0.885. Up slightly from April's lows, but still well below its peak earlier in the year. Back in February, just before the KYC deadline, Pi saw a massive surge, hitting an all-time high of $2.98. That rally was fueled by speculation, early exchange listings, and excitement around Pi finally becoming tradable. But when March came around, and the transition wasn't as smooth as promised, the price tumbled. In April, it hit rock bottom at just $0.4012. That's an 86% drop from its peak in just over a month. Technically speaking, the 24-hour chart tells us a lot. On May 15, Pi opened at $0.8953 and dropped to $0.8410 before closing at $0.8656. This shows strong selling pressure, investors were taking profits or cutting losses, and the market was hesitant to support higher prices. The MACD line, a momentum indicator, sat at 0.0307 below the signal line at 0.0481, suggesting bearish momentum could continue. The RSI, or Relative Strength Index, dropped to 54.73. That's just above neutral. Moving away from overbought conditions, but not yet signaling strong buying interest either. In simpler terms, the bullish push is fading, and unless something changes soon, Pi's price could see more downside. Zooming into the 4-hour chart, the 90 cents resistance level is clearly being defended by sellers. Every time Pi tries to break above that level, it gets pushed back. Momentum is weakening. The candles are showing indecision. Traders are sitting on the fence, waiting for a clearer direction. If Pi fails to hold the 85 to 80 cents support range, the next leg down could bring it to 70 cents or even back toward the April lows. But, and it's a big but, if the project regains user trust, continues development, and shows real-world adoption, the token could bounce. A confirmed break above 90 cents would be the first sign of a short-term recovery. So, is Pi still a good investment? That depends on your outlook. On one hand, Pi network has achieved something impressive. Over 60 million users, all brought in through a mobile mining model that few believed would scale. The idea was simple: use your phone, mine Pi daily, and help build a community around a new Web 3.0 ecosystem. And despite delays, technical hurdles, and regulatory gray areas, the community stuck around. But on the other hand, the lack of open market accessibility for years kept Pi speculative. Even today, Pi is still not officially listed on most major exchanges. That limits liquidity, makes pricing unclear, and complicates adoption. And with the recent fallout from the KYC deadline, many users are now wary of the project's long-term viability. So, what about those high price predictions, $5, $10, even beyond? Analysts believe that Pi could eventually hit $5 if adoption grows steadily and developer activity on the network picks up. For $10, though, we're likely looking at a multi-year timeline. Some models suggest Pi could reach $10 by 2033, but only under ideal conditions. Global adoption, strong utility, and robust integration with decentralized apps. In the near term, here's what analysts expect. For May 2025, prices may fluctuate between $1.67 and $3.51, with an average near $2.33. For the full year 2025, expectations range from a low of $1.91 to a high of $4.34, averaging around $2.61. Looking further out. 2026, between $1.86 and $2.24. 2027, between $2.56 and $3.15. 2028, $3.34 to $3.93. 2029, a possible high of $4.08. 2030 to 2031, forecasts climb to as high as $6.51 by the end of 2031. It's important to remember, these are forecasts, not guarantees. Crypto is volatile, and predictions should always be taken with a grain of salt. But one development might change everything: the recent launch of Pi Network Ventures, a $100 million fund dedicated to growing the Pi ecosystem. This venture arm aims to support developers who are building real-world use cases on Pi's blockchain. Whether it's decentralized apps, payment systems, or tokenized utilities, the fund is designed to drive demand and make Pi more than just a mine token. It aims to give it actual, functional value. If this initiative gains traction and delivers meaningful applications, it could mark a major turning point for Pi. It would mean more than price speculation, it would mean actual utility, something that many crypto projects lack. So, after all this, where does that leave us? Pi Network is in one of its most critical moments. Its user base is massive. Its vision is ambitious. But the execution, especially around access and communication, has left many in doubt. The price reflects that uncertainty. The market is watching. And every move from here, every listing, every app, every update will shape Pi's future. If you're holding Pi right now, or thinking about joining the network, ask yourself, are you here for the short-term hype or the long-term mission? So what do you think? Has Pi Network reached the end of its road, or is it just getting started? Let us know in the comments. Smash the like button if this breakdown helped clarify things, and make sure you subscribe so you don't miss the next major crypto story. We're watching Pi closely, and we'll keep you in the loop as it unfolds. Thanks for watching. Until next time, stay informed, stay smart, and stay in control of your crypto future.